The top 100 agents are the best of the best, listing and selling more than any other agent in Australia.
So, congratulations, sir. Well done.
These are the practices, actions and beliefs of the most successful agents in Australian real estate. Raw, honest and completely uncut. Welcome to REB's Secrets of the Top 100 Agents.
Well, good day everyone, Liam Garman here, editor of Real Estate Business, back today with another episode of the Real Estate Business Podcast. And a few months ago, we had our guest here in the studio, and he is back by popular demand. Well, popular demand from myself, because it was actually my colleague Alex Whitlock that had the chance to speak to him and not myself. I listened through their podcast. It was absolutely fantastic, and I knew I had to have him back in because we're on the crest of what is quite a changing property market. And this brand that we're going to be looking into is really riding the wave and owning the luxury and prestige property market right across Australia. And I was keen to know a little bit more about how their selling agents are changing the industry and what we can all learn as listeners about their amazing model. And I'm joined by the one and only Nick Boyd, CEO of Belle Property, Hockingstuart and Acton Belle Property. Mate, are there any networks left for the rest of us? I think you got them all.
Maybe more to come.
No, okay, well, first announced here, maybe more to come. No, I'm kidding. But, mate, you were recently in Vegas.
Yeah, I was over there nearly 2 weeks ago now. Yeah, that was for work. That was actually with a conference over there called, we're in exclusive partnership with a group called Leading RE and Luxury Portfolio. And so they've got their big symposium every year. So I make my way across to Las Vegas. It was nicely timed with the NRL as well.
Oh,
so,
yeah, completely random, I'm sure. Yeah.
Totally. But you get to see and meet sort of global leaders in all markets, and we actually collaborate and do a lot of work and business together. And it was a great trip, and it gives you a better global look as well, I think, of what real estate's in for and maybe what to expect. And so we do that very often so that we can kind of prepare our people. Yeah.
Maybe the government was also looking overseas with some new taxes that might be introduced, taking the leaf from the book of maybe some of our European counterparts. But that's not the scope of this. That's not the scope of this podcast. You did mention before we started recording, you did say you had some cool conversations with some luxury brands overseas when you were at the conference and took some quite good learnings from them.
Yeah, so it definitely plays into it. I mean, a gentleman by the name of Dr. Langer I may not be pronouncing it exactly. He's an incredible Argentinian, but he's a luxury specialist. His clients are people like Ferrari or Hermes or Louis Vuitton. And you look at luxury and the product itself is not what you're selling. And I think that's what agents in this country and what our agents do extremely well. It's the meaning behind it and it's the identity it gives the buyer. Yeah. So he's not there, talking to Ferrari around, hey, this is where you put the nuts and bolts, or this is how you make your car go faster. He's there saying, what does your brand mean?
Yeah.
And that's really, really advantageous if you understand that. A lot of people will say luxury is lifestyle, like we sell lifestyle. To me, that's quite shallow because what you're actually there to do when you're selling a product of a luxury nature, whatever that segment is, the best agents are the ones who actually are selling the future identity of what it will mean to the person purchasing it. So it's sort of like, think about a pen. You're holding a pen there. There's also a $1 pen and then there's a $2,000 pen. They have the same function, but then why do people purchase a $2,000 pen?
Exclusivity?
Scarcity,
yeah.
Exclusivity, identity. Could ego play in it? Yeah.
100%.
And confidence. How does it make you feel being able to write with a pen of that nature? So the same can apply into all segments, and particularly into what I think is one of the most scarce segments, which is property.
Absolutely.
There's no more, Balmoral slopes being built in Mossman or Toorak, or going into the eastern suburbs of Sydney, or I jump across to Western Australia. We've got a lady over there called Bev Haymans, transacting property over $15 to $20 million now in Cottesloe Beach in Western Australia, and there's an appetite for that market because there's no more of that market being built, and that's what I think. If you understand that, and then you understand the meaning of what you're actually there to do, it's not just the attributes of what it holds, it's what it means to the person you're showing it to. The best agents understand that and they lean into that.
So you mentioned some of the strengths and weaknesses versus just with marketing and selling luxury brands right across the world. I like to think that in Australia, and I've looked across the ditch a little bit in New Zealand, but in the UK as well. I spent quite a few years there growing up. And it does seem that Australia has quite a robust, forward-thinking, smart, resilient real estate industry. Just from some of your conversations with colleagues overseas or from what you've seen, what are some of the strengths and weaknesses of the Australian real estate industry versus other countries? What can we learn from in particular of what they do overseas?
Great question. We're run incredibly sophisticated compared to, I believe, personal opinion, to the rest of the world as an industry. We hold lower days on market as an industry compared to most other sort of westernized nations. And that's fundamentally because of a few pillars that we kind of adopt and believe to be sacrilegious. Auctions, they're not seen as a fire sale in this country. America, they are. Vendor paid advertising, the agent pays in America. Yeah. So these then change the dichotomy of how you actually present a property to market, and then the actual process of how they sell a property expands. So we're incredibly efficient in this country is the way that I would best describe it. I'd say that we're almost overly efficient in some manner. Do you know what I mean? Where it's sort of, it gets to a point because we're so good at what we do that it becomes an opportunity for third parties and everyone else to go, I want a piece of that pie. Yeah. And that's a problem, right? So speaking to people in America and Canada and Europe, that was a couple of weeks ago, they all have significant challenges ahead of themselves. So it gave me a lot of confidence to the Australian market. But I think what it's going to do is we've got problems in the world. That's very clear. Australia, and we've got problems in our own backyard. If I go and look, though, globally, where would I want to be in the world today? There's nowhere else but Australia. I think we are completely blessed still. And that's still with the worst government, in my personal opinion, cost of living, all these problems, we are still an incredible safe haven. And so I don't think, with that said, I would say the luxury market is going to stay very resilient throughout it for those reasons. Because I don't know about you, I would rather be in a country that I can wake up safely, even though with worse tax rates and everything, than in a country where I'm genuinely in fear of my life.
Absolutely.
Do you know, and that's what I think it really comes down to. So yeah, I don't know if that really answers your question, but I go overseas every year to stress test our market and also just see what sort of technology's out there and things of that nature. But it is always to try and get a crystal ball look into how we can best prepare our agents for what's next.
And I do tend to agree. I think we are relatively so far ahead. And I find it interesting when, you have conferences and, we've done it with REB, but, you have conferences and you bring in speakers from overseas. And I almost find it ironic because outside of, the headline, maybe TV, and that's cool meeting a TV star and hearing them. Now, I don't knock it at all. But when they come to teach about real estate, it's like, really? In the luxury property market, if we're going to boil it right down, if you take a house, you mentioned the slopes of Balmoral, right? If you take a very well-performing house in Balmoral, that would be worth several flats in New York.
Absolutely.
And so the marketing campaign that goes around, the sophistication that goes around it, we do bite more than we can chew.
Totally agree.
And if I may give my opinion for a second, because you mentioned the government. Oh my gosh, you just, I wasn't going to bring it up. I thought there was going to be a day where I wasn't going to bring it up, but my opinion, my opinion, I do get a little bit worried with the global insecurity that we're seeing at the moment, that it's being used as a scapegoat. Hey, I actually found out a very interesting stat that I'm sure our listeners are going to love. Did you know in 2008, oil per barrel was 40% more expensive than it is now?
40 more expensive?
Yeah, it was $139 USD in 2008, and it just cracked 100 USD by the time we're recording yesterday. So
the only thing I can say to that, though, Liam, is we're not over yet.
We're not over yet. and what I've been trying to understand is that there are a few structural issues that we have as a nation that might be leading to the fact that I think petrol price at the Bowser have only gone up 13% in the US and they're up at 42% here now.
Yeah.
There are a few structural issues that we're facing, which I think we were going to be going into with or without a war overseas. I think, looking at underlying inflation predictions where energy prices went up 33% last year, they were predicted to go up another 24% over the next 12 months. I think we're going to be sailing into this regardless.
Yep.
Anyway, that's just my take. But underpinning that is I don't think that there's cause to panic. I think we have a very robust and strong property market here. And I do see it as still a time to get around property. But one thing I do want to ask about what you were saying in terms of the US, and this is maybe more of a psychological question, but you mentioned that a lot of the selling agents would have to front up their own VPA.
Yep.
Does that, on the ground, my knee-jerk reaction would say that would probably lead to cost cutting at an agency level, therefore worse campaigns, therefore lower selling prices, longer days on market. Is that kind of how it plays out?
Yes and no.
Yeah.
So their commission rates are substantially higher, but it's a longer runway till you realise that capital in terms of the margin coming in. They do tend to spend well on prestige properties, and they do the right things like video, walkthroughs, all the right areas. But it's a capital outlay, right?
Yeah.
It's a significant capital outlay that is either worn by the agent or by the business initially up front until the commission is realised into that business. So there's the significance of like running costs becomes a really big thing.
100%.
Right?
Yeah.
And
especially if you've got several campaigns on the boil at one point.
Correct.
Yeah.
And so then that's why the emergence of different models, I believe, my personal opinion, why they have sort of emerged around, you don't need an office, you don't need this. Well, it's a complete justification as to, well, there's huge margin costs on cash flow. And so if we can eradicate some of these fixed overheads, be it offices, that's why they're going down that path. So that's again, we are so lucky in this country as to the model that we have. Average days on market in our business currently across 20,000 properties per annum is sitting at about 32. Do you know what I mean? Like, it's phenomenal. We've got an average sale price of $1,380,000 that I checked this morning nationally. Wow. So with those sort of metrics, I class ourselves as the most premium network in the country because we're in every state around the country as a national group, and I believe that's partly because of our model, partly because of our people, but also partly because of the environment we work within. And that's why I just would never trade us for any other country.
That would probably put you at the highest average sales price.
Yeah, for
a national brand.
From my data, it puts us as the highest for a national brand in all states, except I've got to say not Northern Territory. We haven't yet gone to Northern Territory. It would put us up there, absolutely.
Now, for people that are looking to potentially move into the luxury market, prospective agents, people that are looking to maybe move the markets that they're currently servicing, what does it take to be a top-selling agent when dealing with high net worth individuals, when working in the luxury market? What makes a top agent in those areas versus really everywhere else in the country?
Sure. So we're very fortunate. We've got some extremely good agents that call our network home. And the first thing is, it's not a strategy that you can go out overnight and say, I'm a luxury specialist. I think you're kidding yourself if you go just and the biggest mistake, I think, are better off starting there. What I see agents make the biggest mistake on is they're starting to get runs on the board in the average price point within a market, but they stumble across a whale, what I call a whale, someone who is a high net worth individual. They form a relationship and you get an opportunity.
Yep.
Right?
Yep.
And the opportunity is just so big and exciting, and yet you've never done it before.
Yeah.
You've got no appreciation for the type of client you're stepping into the door with, and you just get ahead of yourself and you run at it and you lose it. So rule number one is, if you've never done it before, do it with someone who has. Like, let the ego slide. Don't park that and go, is there someone in the business that I'm operating in that I know has transacted in this sort of segment before, whether it be geographically close by or price segment? Am I better off bringing them with me to actually service that client at the highest standard? The second thing is to understand the type of client you're dealing with in high net worth. They're highly educated. They're there for a reason. So there's no bullshitting them.
Oh, they'd have a major BS radar. That was the first thing I thought of. Yeah.
100%. So, and I think this applies to all segments. Tell the truth.
100%.
Okay. This is just human interaction. But I believe that has to be at the forefront. If it's not their time, it's not their time. If it is, advise accordingly. But understand that at the core of most people that we see that transact through our network, privacy is of the utmost importance to both sides, seller and buyer. Like privacy, there's been numerous transactions that have gone through our group where there are special conditions and clauses around anonymity so that it cannot be found who bought, who secured what. And so there's a lot of risk when you're stepping into this arena. And so if you don't take it with utmost respect for both sides, you lose the opportunity. And so it's never on your time, it's on their time. And that's where I come back full circle to say, that's why when you're selling or when you're pitching, it's not just pitching the view or the location. Like that's the obvious. Like anyone can go, yep, there's only one of these. But it's the meaning behind it. It's the meaning to what the purchaser will mean for them moving forward. It's the future self of the purchaser. And if you can understand and communicate that effectively, that's where the value's found. But nothing above all else, this is time in the market that actually gets you there. It's something like I think of some names like Simon Harrison or Brendan Pomponio, Josh Perry, and then Bev. I mean, we've got so many great, successful prestige agents in our network. It's their time in market, being consistent, always doing the right thing by the people around them, because your reputation is worth significantly more than any luxury sale, right? And that's, it doesn't matter if you've sold one luxury sale price at a record. If your reputation's poor, it's not going to get you a second. It's just not.
Did you burn, a 10, 15, 20, 30 year long career over pulling the trigger too soon?
100%. You see that. And that's where I come back to it, saying for an agent wanting to break into this, because it's obviously attractive, right? Like it's big numbers. It takes time, but also the first thing you need to let go of is your ego. And the first thing you need to say to yourself is, when you get that one opportunity, are you the best person walking in that door?
So you might need to park it. You have to park your ego and actually bring someone with you.
100%.
Can I ask, with these, finding a buyer would be sometimes potentially challenging. It's not necessarily if you might be in a nice area and you've got a very affordable entry-level apartment in a nice area. I think it'd be quite easy, more or less, to get a buyer through the door. When we're talking really big luxury products, the amount of Australians that you can reasonably market to, it's quite small, right? How do you weigh up, I suppose, the efficacy of building an internal database of potential buyers versus the marketing campaign? Which one's more important? I suppose that they both have to play a role, but how do you balance that?
So more so than not, you're spot on in terms of saying that do both play a role, yes, but it is more determined by the circumstances of the seller. So if it becomes anonymity is pushed to the forefront, well, maybe public advertising is not going to be the pathway you need or could take, even though you may want to take it. So it's understanding the circumstance of the seller, not just the property that you're actually marketing. And so does digital, social, print for me in luxury is almost a must-have.
Really?
Almost a
as
must-have.
in print in what way? Like
Papers.
leafleting?
No,
newspaper
brochures, all like that's an expectation.
Yeah.
I think it's an essentials package.
Yeah.
But I'm talking the AFR. I'm talking all the actual print publications.
So going back to the basics.
100%.
Yeah. Okay.
100%.
Yeah.
Because if you look at it and you say, okay, the thing I still love about print and why I think our industry needs to get behind it is that when you do get a courier mail up in Brisbane, it comes into the house. Everyone sifts through the pages when they've got 5 minutes, and it sits on the coffee table and it sits there for a week until the next copy comes and then it gets turfed out in the recycling. You go digital, you have to be active to want to go digital, right? Unless you're just window shopping. But then you go about your day and what do? You close the app. Like that's just the reality of it. They both have absolute importance and absolutely they both have a place to stay. But luxury seems to be attached to paper more than ever before in my eyes. And so I think if you are going down a visible campaign, print should definitely be a part of it.
In dealing with the psychology of sellers and vendors in the luxury market, what are some considerations to make sure that people, and kind of what we touched on before with the BS radar, there are going to be very unique psychological proclivities to people that have these properties. What should people watch out for, and how should they hold themselves? How should they present themselves in dealing with high net worth individuals?
It's an interesting one. If I look at the best agents around the country, not just our brand, all brands, there's some phenomenal people out there. It's not the showy ones. Do you know what I mean?
Maybe you need to wear some socks or something with the suit. I
You
will
said-
say that, not you.
You said that.
That was
I didn't
Liam.
say
Yeah.
that. That was Liam. No, but it's conservative.
Yeah.
That's what it's not about us. It never has been. And so the most, I think, effective prestige salespeople are approaching it in a very controlled, conservative manner, and they're calm, and they present themselves very ethically. They are, and they also present themselves in a manner that is not showy but nice. You know what I mean? I'm not. What I'm getting at is, don't turn up in board shorts and thongs.
Yeah.
But you turn up respectful. You turn up understated. There's value to understated elegance, and that's what I see just time and time again. If you just look around, at the people that have the biggest listings, and look at how they present themselves. It's very clear to see. So it's not always about beating your chest the loudest.
Understated elegance, I think, is fantastic, and I'm happy to make the observation, but sometimes that is forgotten in the real estate industry.
Yeah.
The conservatism, because there is an element sometimes where it can be showiness, right? And the showiness is a repellent. To some of these people.
I feel the industry is so hard from a sense that you've got to pitch yourself, right? So there's an element that goes, you need to go and actually make a brand of your name out into the marketplace for people to see and hear you. And sometimes the loudest gets heard first, but it doesn't always mean they are respected through that process. So that's where it's like, how do you find the balance between being recognized, but also for the high net worth clients being trusted? And that's the whole game. The whole game is the trust. So it takes time, but it's doing it in a conservative manner.
Now, quite closely tied to this, I want to get some insight into what it takes to have a high-performing team, especially in these luxury markets. Primarily for our licensees, principals, directors that are listening to this, what are the daily practices, the cultural teams that make a high-performing team in a luxury market? What are the teams that win? What are the teams that lose? And what make them up?
So if we look at high-performing teams overall, I don't think there is actually much difference between whether they're servicing luxury or other segments. So that's a good thing, because that means it can help everyone, right? Yep. But I would say that the culture of a team in general is, I think people are foolish to think as a business owner that they only have one culture in their business, right? And that's something that I think's a bit of a misconception. There's actually multiple cultures existing in most people's businesses, depending on the size they are. So the larger the organization grows, the more subcultures they will have in the makeup of the overall culture. So example, an EBU team, that actually has an internal culture.
Yep.
And that EBU team sits within a greater sales team. There's another culture. The thing that you need to ensure is, have you got alignment on the standards and values which is nothing to do with culture, right? And so culture is actually having the acceptance and appreciation that there's going to be differences in your organisation, which is okay, but there has to be a set of standards that can't be bent or twisted.
Yeah.
Okay. And that can come around how do we present ourselves? How do we do an open home? How do we what's our expectation on follow-ups? What's our expectation on settlement gifts, on settlement process post settlement day? And that's a big thing for, say, the luxury segment. It's more than just a journey of a campaign of going, I present a property, show a buyer, do a negotiation, sell the property, settle the property next. It's a client for life more so than ever. So it's what is the touch points beyond settlement day?
Yeah.
How are you going to service that person through advice that you can give post their settlement, more so than just saying, hey, well done, you did pay $25 million for that home, just letting you know you're on a price update. Like, that doesn't work. Right?
That's what I was going to ask. What, my frame of reference is with touch points. I get a call every 6 months from a particular agency. Hey, are you looking to sell? It's like, mate, I only bought this place 2 years ago. Relax. You do feel like you are on just the routine call list every 3 to 6 months. You get, oh, hi again. No, not looking to sell.
Yep.
No, I don't need a reval. See ya.
Yep.
And you kind of highlighted that ain't going to work.
No,
that ain't going to work. So what do the touch points look like? What does that long-term engagement look like?
More about life, more about understanding people's values. I touched on geopolitics with you, and it set you alight.
Oh, it did, yeah.
Right? That's called building a relationship.
Yeah.
So when you find commonality and you have education and smarts around just knowledge and interests that are aligned, you're no longer just talking about property. All right? What we're actually doing is we're talking about building trust with each other. So that's where if you have a transactional mindset, you will not do well in luxury.
Yep.
Full stop. And if you've got if you've got a mindset that is genuinely curious and genuinely interested, where it might be beyond the home but more about the person, there's a multitude of things you can speak about.
So what would it look like? Nick and Liam have a sit down. I go to CRM afterward and say, Nick's kid plays for this football team.
Yep.
He orders a double espresso. What does it look like? What should you be collecting? And how do you...
It's learning the knowledge throughout the interactions you have through the process of selling. So I'll give you an example. There's a gentleman by the name of Greg Griffin on the northern beaches of Sydney. He sells a lot of the sort of deep water frontage properties. So he's dealing with a lot of high net worth clients there. During that process, you get to see what their interests are. Deep water frontage properties. Do they have boats? Do you have an interest in power boats or sailboats? Are you a member of a club? Suddenly, you're understanding their lifestyle, and that's actually what you're going to be connecting on. So, does he have more interactions at the Royal Motor Yacht Club down in Newport? There, yeah, probably he does. So it's understanding those nuances. And it's listening. It is listening to, what is their career? What are they predominantly business owners? In what sector are they business owners in? This is the great thing. You don't have to know the answers. This is what I love about it. You've got to just be curious. Like you're getting to sit or work with or negotiate with someone who is clearly an expert in their field. So you also have an opportunity post whatever they require to go, hey, I'd love to learn a bit more about that. It's fascinating. I get to speak to in just my line of work on a daily basis, not from doing transactions, but I get to speak to some incredible people in so many different sectors, and it's like I get to go to school every day. Do you know what I mean? Like, so stay curious. I think that's one of the best pieces of advice when you're dealing with anyone, but particularly high net worth, because they may not want to share. And you'll read the room. It's like when the time's right. But that's what your conversations can now be derived around. And when the time comes when they're ready, right? That's the key. When they're ready, they're not calling anyone else.
How do you maintain that relationship? Is it a phone call? Is it happen to run into them at the yacht club? Like
it's on what their best form of communication is.
Okay.
And that's what you've got to work out.
Yeah.
So it's not like you're going to go and have 8,000 high net worth individuals. You're not. Like you're not going to be able to service that properly. So you might have 50, you might have 100. You'd be extraordinary at that when we're talking really high net worth. What is their best form of communication? It might be that you see them at a certain charity event. It might be that you see them at the club, or they are happy with a text message every once in a while. Like you've got to service the way that they want to be communicated to. I think that's where the world's moving in all segments, though. To be honest.
Absolutely. You mentioned before about standards versus values as well, and I think that this isn't in the real estate industry. This is right across
Absolutely.
Right across the Australian economy. There are companies there that really do live by their values and that really do live by their standards, and that does flow down into teams that are cohesive, teams that are working towards a common goal. And there are companies out there, again, not in real estate, but it's every industry, right?
Yeah.
Where a value statement is something that they come up with 150 words when they're starting their company. It gets slapped up on a website. No one ever revisits it again. How do you, and this might not be at an agency level, but you as a leader, how do you lead an organization to continuously go back to the fundamentals, the DNA of an organization? What makes Belle, what makes Hockingstuart, what makes Acton, those initial standards and values. How do you keep on that path rather than just erring from it, and it just ends up being 150 words on the website
Or painted on the wall.
Paint on the wall.
Yeah. So great question. I'll give you a real example. So we've been around for about 21, 22 years. From day dot, when Peter Hanscom sort of forged ahead in growing Belle Property initially, he had a motto, and the motto was fewer, better people. That was it, 3 words. I would dare say if you asked any franchisee in our network, what do we stand for? I dare say every single one of them would say fewer, better people.
That is a great motto.
And it's not written anywhere.
Yeah.
Nowhere.
Yeah.
It's not on our walls. It's nowhere. Because that's actually our underlying value set, or that's our underlying business model, right? So how do we get that? Well, communicating it more than you realize you need to, like over communicate. Yeah, like every event, every moment, like it is constant, and people always hear fewer, better people, because ultimately it's a business model that aligns to our business model. So, and our business model for us is about what it really stands for is taking talent and performance very seriously. That feeds into better profit for a business owner. So meaning if I can do more with less, I'm going to be able to provide greater value to them in return. I'll be able to provide greater resources to them. And ultimately, everyone involved and invested will be earning more money. Yeah. It's pretty simple when you strip it back. So fewer, better people has been sort of like this unspoken but spoken very often mantra. And
I love it. I think that is probably, and I'm not saying this to you, I mean, it speaks to me as a human, that level. And, it's almost looked down upon in today's society. And I'm not one of those, I'm not like a rah guy, but exceptionalism is a fantastic thing when it's done right. When you have a tight unit of individuals that work together for a common good, without, and I've got to be very careful with my words, but without people that detract from that mission, I think is the best way to put it, by people that aren't exceptional in what they do. They don't want to excel. They're happy at being average. When you have fewer people that fall into that camp and the correct people that fall into the camp of wanting excellence, you can achieve amazing things. And at the end of the day, the way that I look at it is you're a member of a very elite cadre of people that are working towards, at the end, winning. Winning, and that's the goal. Winning for the vendor, winning for the buyer, winning for yourself, winning for your team.
you're spot on. I was reading, I can't remember what book it was, but they were talking about, they were referring to a corporate structure around A's, B's and C's, right? They were sort of saying like, oh, you've got your A's and everyone knows who the B's are and who the C's are. And I was just looking at that going, gosh, that's depressing. Like, no, but it was almost like acceptance is what I saw. And you know what I mean?
Yeah.
And so don't get me wrong. I'm not saying, oh, if you're not an A, you don't belong. I believe our role as leaders is to create a pathway for everyone to be an A.
100%.
In that sense, right? But if you go and just build an organization where you're happy to have C's, there's a problem.
Yeah, without it. And I would say, to extrapolate that on that, A's aren't limited to selling agents.
No, this is humans.
I work in comms. If you have an A comms person, a lot of people might say, well, you just make nice videos or you sit on podcasts. If you have an A comms person, you're getting out there. Everyone knows a brand. You'll have an A operations support person.
Yep.
Things don't fall through the cracks. You'll have an A property management team. They'll be providing leads and long-term pipelines for the sales team. You've got the A's. And every single person, it's not the elitism in terms of putting sales agents first. Everyone in the whole ecosystem is an A.
Everyone should be treated as an A.
Yeah.
And that's what I think Fewer Better People does, giving everyone equal opportunity to be at their best that they can be, as the saying goes. But I think there needs to be some realism around that, having hard conversations in a very delicate manner, if they're not up to standard, needs to also be addressed. Because I think what happens is if you allow mediocrity to maintain, your top performers get disgruntled. Yeah. Right? Because they're going, hang on, why is that happening? Right? And so it's not, and I'm not saying you go out and just destroy everyone, but I'm saying that you need to respect the standard that you've gone and ultimately set, and then you've got to hold that, right? You can always change. You can always say, I've got it wrong, and that's okay, not a problem at all. But if you don't acknowledge the fact that if you're going to truly treat yourself as a high-performing team, there are expectations, right? Like it's you liken it to, you hear on the the Formula One that was recently, you hear about the pit crews there. I mean, well-oiled machine, right? Yeah, well-oiled machine. You hear about the fighter jet pilots, like they are at the absolute pinnacle of performance. And I liken sport athletes to real estate agents. There's such a big correlation between the two. So if we don't hold the standard, I think, for our industry across the whole board, but also into an office level, you're going to find that there's going to be a mix of, you will find that your average will be just above the line where consequences start.
Yep. Yeah.
Does that make sense?
Yeah, which is a terrible place to be.
Correct.
Yeah.
So your standard of performance will sit just above the line.
Just enough so people don't get in trouble.
Where consequences begin. And that's a really dangerous place to be.
Yeah. How do you go about, and it is something that humans are inherently very weak at, which is those hard conversations. No one enjoys being in a situation where you sit down and give someone feedback. Everyone hates that. The way that I've always looked at hard conversations is, you owe it to your people. I think everyone who's listening to this podcast, you would have been in those situations. I've definitely been in those situations thousands of times where, there are jobs that you join and it's almost day one and they'll be like, oh, Nick, here's your binder, now go. And you're like, but what am I doing? I genuinely don't know what I'm doing. And you might be there for a few months and you're like, I know I'm not kicking any goals, but no one's telling me otherwise. I don't know what I don't know. Yep. Then there will be a lot of people that fall into that camp. You owe it to your people sometimes to have hard conversations, because at the end of the day, as a good leader, you want your people to flourish, especially if as a leader, sometimes you drop the ball and you don't give them the time, you don't give them the training, the resources to upskill and be the best they can be. How can agents, principals, directors, licensees listening to this podcast now, how can they go about having those maybe hard conversations, but conversations designed to uplift people and make them better at their jobs?
Yep. I'll give you a real simple framework. So hard conversations, they don't exist really? I mean, I use that. They're necessary conversations.
Yep.
Right? That's actually out of respect for the person. So then you go, okay, there's a framework, really simple framework. Tell me about some of your wins and let's celebrate, right? So that's how you start the conversation.
Yep.
What's working really well for you? Then tell me about what's not. What's struggling? Where are those issues? Third, what can I do to help you get through them?
And that's it.
Because now I've actually asked for permission to go into the space of what is the blockage.
Yeah.
Right? Instead of just saying, hey, Liam, guess what? I've noticed that you're not doing your 30 calls a day. Let me just tell you this. You need to do them, right? Because I want to see you here next week.
Yeah.
That's called a brutal conversation.
That is brutal.
And that's not a leader.
Yeah.
Right? A leader's role is to protect, to grow, to encourage, but ultimately to show a pathway. So, hey, what's working really well? Where are some of the blockages? And most importantly, what can I do to help you? What can I help us get through that blockage together? If that means, hey, do you want me to jump in the trenches with you? Do you want me to go out to that appointment with you? Like that's suddenly what you're doing is you're providing feedback through a pathway of education, but also you're ultimately coaching them through, right? And you're building loyalty and trust in return where they're going, awesome. It's not just telling me what to do. You're actually going, hey, I've noticed something that might be hurting you.
Yeah.
Now, second to that, everyone's different. So there's another little layer to this of how you can communicate that to someone. If I saw something that's hurting you, how would you like me to tell you? Think about that.
Yeah, I'm
phrase.
trying to unpack it.
Just tell you up front. Do you want delicately?
Yeah,
Would you like me
probably.
to shoot you an email,
Yeah.
or should we just pop out for a coffee? But if I saw something that I thought was hurting you, how would you like me to communicate that to you?
Yeah.
Suddenly, again, this is called like permission to actually help.
Yeah.
Right? Instead of just permission to, hey, you're not keeping our standard, that's not good enough. It's like leading with a stick doesn't freaking work, right? It doesn't. Like it works for a short period of time, right? But ultimately, if you don't build the relationship, the trust, the values, the beliefs, you're not going to get anywhere long term. So I look at it going, if there's issues around standards, there's how do I create the situation that I can have the open conversation with you, that you're on board to have the conversation. Then there's a framework around how I can talk that through. Let's start on your wins. Let's look at your blockages, and then let's open the conversation with what can I help you with to fix those blockages. That becomes very, very programmable in a way with that framework, because now I'm putting in a framework that has a defined outcome, right? And that's where I can start building accountability, because at that point I can then say, fantastic, let's do this as a plan. Yeah. When will we circle back on that? And that's where I mean, we've got some extraordinary leaders in our network that I know do that extremely well, and that starts to permeate throughout the whole culture, where the best culture in my eyes is not just one leader. It's actually when people start to contribute from all levels within an organization. And that's the real truth of a culture for me, is when people start upholding and helping each other and holding each other accountable. That's,
At what point do you rip off the Band-Aid? At what point have you had those necessary conversations and standards aren't changing? What's that kind of go, no-go? If someone is demonstrating, I think a lot of the terms that mentors use, I don't know if it's not PC, because it sounds kind of not PC, like someone's uncoachable, you know? How do you know when someone's at that level, when it doesn't have to be a sales agent, but people are performing at their required standard?
So you got a misalignment. If you've got a misalignment, I usually think misalignments when you've done all the right things, like, right? You've really done all the right things. I was asked this once by a principal of a business. They were really challenged by someone in their business, and the question I asked them back was, if you're going to let this person go, will you be able to go home at night knowing that you've done everything in your power to make them succeed?
That's a very, very tangible thing. at the end of the day, are you going to feel guilt? Are you going to realize that you didn't, as a human, do your bare basics to ensure that they were tooled and tasked?
Correct.
Yeah.
So that question there is for them to reflect upon, okay, what was my contribution? What are the things that I may have said, done, or promised that I didn't upkeep?
Mm.
And so it gets you to reflect. So I think that reflection piece becomes really important.
Mm.
If you're able to go, no, I've done everything and more.
Yeah.
And you're still not in alignment, then it becomes your duty.
Mm.
Like it's different then, right?
Yep.
And so that's when I go, okay, not a problem. Move forward with confidence. That's what it really comes down to.
No, that's a very tangible lesson.
Yeah.
I think it's very fair. On the alignment note, I think just conscious of time, but just to wrap us up, I'd love to get a little bit of insight into how you go about aligning a team in a luxury market, in particular the PM side and the sales side. It's something that we hear from so many of our listeners that, PM sometimes seen as a bit of a backroom function, which does impact the sales pipeline for the long term. I'd be interested to see how this works in a luxury prestige market and how you can have an ecosystem in an office that is supportive of one another for that long-term growth.
We've got some extraordinary property management businesses in our network, like phenomenal. The ones that are positioned in sort of very premium markets, obviously the asset that they're looking after can be anywhere from $2,000 to $5,500, $10,000 a week. Okay, like it's up there. What comes with the expectation of that, right, is also up there. So you're usually you become almost more concierge-like.
Yes.
Okay, so what I mean by that is built into rents, you're going to find, there's garden maintenance, there's pool maintenance, there's all the bits and pieces that as a concierge property manager, you become more of an advisor to say, how are we structuring the asset for the tenant, or for the tenant and the landlord. The landlord in that segment will probably have a already existing relationship with an agent in that business.
Yes.
So now the continuity between communication becomes, you need them to be aligned. So we're not talking, if we're talking true luxury, true prestige, let's say $10,000 a week and north, you're not going to have a rent roll with 1,000 of those properties.
Yep.
I'm happy to be wrong, and someone can maybe
I'd love to see that rent roll if it exists.
Can you imagine the multiple of it? But you go, okay, so how many are really classed as that?
Yeah. And
if they don't have a designated agent who's already have a relationship with the client like that, which I'd be shocked by, that's step number one. Like that needs to be attached. So assigning is who is going to be the person that needs to also be able to communicate and start building relationship with this landlord. Then the concierge service from a property manager also helping them. The one thing I probably also want to point out here is the segment of the market though that's say for property management in the luxury space. There's also a huge tendency to go, well, what is the upside and best return rate that I can achieve my landlord? Is it long term or is it short term? Right, so it's important to delineate between the two. Short term, 18 to 22% management fees, roughly. Long term, in Sydney, 5.5, 6, right? Yeah. You go to Western Australia, it's like 9, 10. But there is merit in understanding or offering a different revenue line in your business.
Yes.
Because now you're presenting yourself in a far more broader sense to that very educated.
What would the difference between a long term and a short term be in terms of time?
Time?
Yeah.
Well, in terms of short term, what I mean by that is you're only entering a property on, depending on the location, it could be either executive rental or holiday rental.
Okay, literally short term. Okay, yep.
Short term, as in like you're doing, I don't know, $2,000 a night.
Yes, yep. No, understood.
Do you know what I mean? Whereas the long-term rate might be $3,000, $4,000 a week. But you get security around yearly tenancy, but you then are weighing that up against, obviously, I might only have it booked out for 3 months of the year. So understanding if you're entering into that space, it's how do you enter it strategically and offering differences. I mean, that's why we've got Belle Property Escapes, which is our short-term business.
Right.
We've got
I didn't
that.
know you had that.
Yeah, so we've got that already 11 locations around the country.
Yep.
And it's in very key markets, and we're expanding that now because it's a very key differentiator, like where you can actually now pivot. And we went into COVID at back 21, we were moving and transitioning short terms into long terms overnight. But then because at that point, it was like, you're not traveling. Okay, cool, long terms.
Flip.
And we flipped it, and we're able to manage the risk for the actual landlord.
Yeah, for
and
sure.
we're giving them best rate of returns on both sides of the coin. So I think that's where, when you want to be in that space, attach it to an agent, offer differentials. So being short term, long term, if you can. Just be aware that short term comes with a totally different business model.
For sure.
Yeah. So hope that answers it.
Now, looking on the horizon, Belle, Hockingstuart, Acton, Belle as well, what's on your horizon? What are you working towards over the next 12 months?
Ooh.
I mean, if you want to announce something, you can. We, to our listeners, Nick and I didn't actually agree on it, but if you want to announce something, you can.
Oh, that's a big one. I can say the next 2027 I'm very excited about.
Yeah.
Extremely excited about with the stuff we're working on. It's going to be, I think, the next remainder of this year is going to be very challenging. I don't see any other way. I do think we're going to see increased volume into market, significant increased volume into market in certain markets, and that's going to put pressure on the overall market. But for us at Belle, it's actually staying consistent to our fundamentals, fewer better people. We've got some extraordinary franchisees that are joining us recently and opening up soon. So there's some announcements in that space as well.
Watch this space. Yep.
Yep. And we just opened, I think it was 3 days ago, a phenomenal guy over in Karratha.
I saw that.
Yeah, great guy.
Yeah,
great
read
guy.
all about it on realestatebusiness.com.au.
You can. So there's more of that, right? Which is great, but it's beyond that. I'm looking a bit broader now, where it's looking around technology, it's looking around acquisitions. There's a few things that are on the boil that I can't go into, but 2027 is exciting.
Watch this space because we'll announce it all on REB. Nick, it was so nice to have you on the podcast. Thank you for joining me.
Pleasure.
That was Nick Boyd, CEO of Belle Property, Hockingstuart and Acton Belle Property. And that is all we have time for today on the REB podcast. And until next time, bye-bye.